South African June consumer inflation came out below market forecast of 7.1% to 6.9%, while producer inflation came in at negative 4.1%, also beating forecast of negative 3.9%. Joining me now for more is Alan Chown, head of the inflation desk at RMB. Alan, thanks very much for joining me.
It's a pleasure.
This inflation number, did it surprise you?
It actually was our house view that we would see a print of 6.9% on the CPI side. The PPI actually produced a much better result, coming down at the minus 4.1%. I think our consensus was a little bit higher than that, i.e. closer to zero.
Now, how sustainable is this downward trend in inflation?
The numbers that we're seeing going forward will probably continue to go downwards. We're seeing the numbers bouncing between 6 and 7% until we see a clear, decisive break into the band by the target band by basically the second quarter next year. So we're looking at somewhere below 6% by second quarter next year, and from there on trending downwards to where our house view is that we'll get to about 5% by year in 2010.
Of inflation?
That is it.
What about wages and electricity price hikes that have been proposed by NERSA and those kind of cost pressures?
Well, there's a definite case for commodities coming down. On the services side, it's a little bit more sticky. But in general, as a holistic view, we do still see that inflation will come down within the target band. And I guess it takes a lot looking at the current economic circumstances. If you don't have too much growth, you can't have too much inflationary pressure either.
Now, the government, turning to another subject, the government issued inflation-linked debt this week. And this today, 1.2 billion rand. What is this an indication of?
Basically, well, for one thing, National Treasury comes to market every week. Every Friday we typically see inflation-linked bond auction, and every Tuesday we see the nominal bonds being issued. What we saw this week was quite interesting in the fact that National Treasury came to market with quite a significant amount.
What is that amount?
Well, just less than 3 billion split between the two different auctions. The 1.8 billion on Tuesday, and then roughly the 1.2 cash value that they issued today. So government's clearly looking to issue while there's still opportunity for them to actually raise extra funding
on the local market.
That's correct.
So this is a good time for the government to be going to the domestic market to raise money?
Well, it definitely seems like the market is absorbing the paper that they are busy issuing, especially on the bond side.
Now, we saw Pravin Gordhan, who of course is the Minister of Finance, coming out a few weeks ago saying that the government should be increasing their domestic borrowing. Is this an indication that the government is now looking to fund that revenue shortfall from the domestic market?
Well, one could definitely take it as an indication, but from our side, it's actually the whole of RMB, we're not looking to second guess the Finance Minister.
Now, Moody's upgraded our foreign currency rating recently. This would mean that getting money on the international market would be less expensive. Do you think the government should be going to the foreign market again and looking for more money on the foreign markets?
From a funding perspective, I mean, government typically looks at various different sources. It's not just about finding the cheapest sources of funding, it's also finding diversified sources of funding. And by doing that, they can look at the shorter end of the local market, the bond side of the market, in other words, longer term, as well as the international markets.
I'd like to take the conversation back to inflation. Looking at inflation, you think it's going to come down to around 5%. What impact is this going to have on the local currency?
Basically, the local currency feeds probably more into inflation than the other way around. We're seeing a relatively strong rand. The US GDP numbers came out a little bit better than expected, which probably bodes well in terms of risk-taking internationally. Now, that's another good sign for the rand as such. I think the dollar might also be suffering a little bit of weakness due to the massive issuances that they've seen in the US economy. But in general, I see the rand is pretty much doing stable. Our house view is that the rand is going to weaken a bit. We're probably seeing the rand at about 9 to the dollar by year end. And then from there on, relatively flat. Actually, our year end view for 2010 at the moment is also 9 rand to the dollar.
What is going to cause a softening in the local currency, do you think?
Well, there are a number of issues at play. It's always hard to say. You might find that the risk-taking ability of the international markets might reduce or not. The local economy might struggle a bit more. But in general, calling where the rand might go is, pretty much playing roulette.
Do you think the markets have got a bit ahead of themselves because they have really been rallying, and we've had these corporate results coming out which have surprised to the upside, but it's really a case of cost savings as opposed to revenue increases?
Well, Our view at Rand Merchant Bank is that we are going to sit through a bit of a struggle still. We are going to see a slowing down of the bad growth numbers that we have seen in the past. We're looking to see probably a negative 2% real growth for GDP for this year, and then next year positive 2.5%. Now we'll probably see the fourth quarter of this year starting to kick into positive territory, and from there on we gain traction as we go into 2010.